asseblief Pieter Rademeier net exit Telegram channel, sy het net $300 in sy trading account deposit.
Hello, hello. Well, good morning, smart traders. I would just like to double check, can everyone hear me? Can everyone see me? Just let me know in the chat section. That would be much appreciated. Let me just have a look here. So I do see we already have quite a bit of viewers. I just want to check, can everyone hear me? Can everyone see me? There is a comment section. Just pop me a hi, hello, anything whatsoever, just to let me know that you guys can see me. I do see there is already a few likes coming through as well. I don't know if that means you guys can see me or at least hear me. Here we go. Hear you well. Thank you, Brian. Thank you, Ian. Thank you, Chemo. Hi, how you doing? Fantastic. Thank you so much for everyone who is here this morning. And this would be our very, very first live stream. So I am going to say this in advance. Please expect some problems. Please expect some growing pains. I do know that this is not going to be perfect from of the very, very first take. So thank you for joining me. We are going to go through quite a bit of things this morning. I'm just going to recap everything that happened last week. We're going to go through everything that we can expect this week. And then we are also going to look at some analysis, just so that you also know what you can expect going into the week, what trade setups you can expect or what you can look at, and we're going to go through all the T's and C's about that as well. And I do want you all to participate as much as possible, so please use that chat function. Don't just sit there. Don't just, be on the sidelines and be quiet. I really enjoy participation from everyone to always ensure that we provide the best possible content. I'm also going to be looking at analysis later on, and I do want to ask already in advance. So I need a currency pair, okay? So preferably one of the majors, so that would be Euro USD, GBP USD, USD JPY, etc. You can choose from there on forward. So please let me know in the comment section which one of these you would like me to look at. And then I am also going to have a look at NASDAQ, and we can also maybe have a quick look at gold. I'm only going to do one currency pair, so the one that gets the most comments is the one that would be chosen. Okay, so I already see that we have quite a few coming through for GBP USD. So if you are agreeing with that, please comment that into the chat section. I would really, really appreciate that from everyone here. Secondly, if you have not yet done so, please subscribe to our channel as well as like this video. Okay, it will really boost our algorithm with YouTube as well, so that would really assist us as well. I know we have almost 16 to 20 live viewers. We have over 25 views as well. However, we only have 4 likes. Okay, so if I can ask every single one of you just to smash that like button, I would really appreciate that as well. Okay, fantastic. Let's get going. I do hope that you all had a great and profitable week. Last week we had a absolute flood of economic events that took place. So I'm going to start there, and then we are going to work our way through from there onwards. So just starting with everything that happened last week and everything that we can expect going into this week. Starting off, we can definitely see that we can expect a much quieter week this week from off our economic calendar. But there is still plenty for the markets to mull over after last week's rate hike. Okay, so on Wednesday, we started off with the Federal Reserve hiking interest rates by 25 basis points. We saw a slight pullback in the market, and then the markets absolutely rallied. Gold, NASDAQ, S&P 500, Dow Jones, everything went through the roof. Then on Friday, we all had the shock of our lives. And it made for some really, really good trading. But the completely unexpectedly strong US non-farm payroll data that came through on Friday. I don't know about you, but personally I didn't expect it. But at the end of the day, as a trader, my job is not to predict the market. My job is to react on what the market is doing. So the data came out. We are going to discuss that a little bit further as well, but it was much, much higher than expected. And this obviously created some new trading opportunities for the week ahead. As well, in this week, we are going to see earnings season continue with media and consumer stocks in the spotlight this week. So I do have some stuff to cover for you guys there as well. And then we're going to look at the Reserve Bank of Australia, which is also set to hike interest rates again this week. And then we're going to chat a little bit about the Eurozone and the UK, which both the euro and the pound will be closely watched during this week as they also release their interest rates hikes as well last week, and just how that is going to affect the week going forward. So what can we expect from the week ahead? Well, after Friday's absolutely crazy job report, so that was our NFP report that came out, this reinforced, or this kind of forced, not reinforced, I would say this forced traders to recalibrate. You know, we had to go back to the drawing board. We had to go have a look at what expectations we now have from the market. Why? Because we could see that the market was, suffering from high interest rates. We could see that that is declining. And now we need to rethink that. Now expectations are there again that the Fed is going to remain hawkish and that their fight against inflation is not done yet. So on Tuesday, Federal Chair Jerome Powell will be speaking, and this would be very closely watched because in that speech he is going to release some clues regarding what their further monetary policy or the future of the Fed's monetary policy will be. So as I said on Friday, NFP results came out at 517,000 new jobs that was created during the month of January. Now, if I remember correctly, we only expected 193,000 jobs to be created. So this is almost 2.5 times what was expected. So on Wednesday, when the FOMC meeting minutes came out after the interest rate report came out, Federal Chair Powell actually acknowledged that there is progress in the fight against inflation, but the unexpectedly high NFP data that came out on Friday has now given the Federal Reserve potential cause, to continue hiking those interest rates. So as a trader, and I've spoken to a few of my colleagues as well, there is a bit of fear again now in the markets. And why? Because the fact that, we kind of thought that the Federal Reserve kind of capped out. You might see one more 25 basis point increase, and now that can be more. Now there could be a 25 or even a 50 basis point increase and multiples of them until inflation in the US has come under control. But this can also plunge the US economy into a recession. So one of the economic reports, now as I stated in the beginning, we have a lot fewer economic reports to look out for during this specific week. But what I am going to be looking out for is the initial jobless claims report that is being released on Thursday. So just have a look out for that. And before I continue with the rest of things to look out for during this week, how did you react to the NFP report that was released on Friday? How did this affect your trading? Did it affect it positively? Did it affect it negatively? Let me know in that chat section real quickly. I just want to know, did you profit? Did you Did you make some losses? Was it unexpected for you? Did you expect it to come out that well? Let me know in that chat section real quick. I would really like to hear from every single one of you while I take a sip of coffee. Okay, so I have one report so far from Tepiso, and Tepiso says he made profits. Tepiso, well done, well done. Rivan said he made profits as well. That is absolutely fantastic. I love seeing that. Brian Berger says he hit TP. I'm absolutely loving these comments so far. Billy says he was shocked. As was I. But he managed to profit and increase his account by 7%. That is fantastic. I'm absolutely loving this. Kimo says he profited, so that is fantastic as well. So far everyone here has done really, really well. I really love that. That is absolutely fantastic. So let's continue. Let's have a look at what we can expect as additionally from of the week ahead. So as I was saying, earnings season is going to, continue on with the media and consumer industry moving to the forefront now. So kicking things off, we're going to see Walt Disney, which is also, just to have a look there as well. Walt Disney is facing a proxy battle over board representation. So just have a look out for that. Additionally, News Corp, which was originally planning on taking or reuniting with Fox Corp to create a larger news enterprise, has scrapped that idea completely. So both these companies are reporting on Wednesday and Thursday. So just see if you are an indice trader or even a stock trader, these are some things to look out for as well. While the New York Times is also due to report their earnings report on Wednesday, as well as PepsiCo, which is releasing their data on Thursday. Now, this one specifically for me is quite interesting because if we're going to have a look at PepsiCo releasing their earnings reports, this could offer us additional insight into how consumers are currently grappling with inflation. Because remember, this is an absolute 100% consumer-based company. So if inflation is currently taking its toll and, spending habits are decreasing, these are this is one of the companies that would actually reflect that. So up until this point, more than 90 S&P 500 companies, let me actually rephrase that. So more than 90 S&P 500 companies are expected additionally to also post their results in this coming week. Okay, so have a look at that. Additionally, over 190 companies have already reported. Okay, so we have already seen a massive decline in the expected earnings of the S&P 500, and this decline in earnings reports was a absolute shocking 2.4% for the fourth quarter. And this is obviously much deeper because, well, the S&P did expect this to drop, but the drop was expected to be 1.6% in their earnings report. And this was actually released on the 1st of January, this expectation that when earnings season comes out, they're expecting about a 1.6 drop in earnings. And, well, as I said, we're now on 2.4%. So the additional companies releasing their data this week will definitely shed additional light on the current state of the economy. Moving away from the US, so moving to some other parts of the world. As I said, the Central Bank of Australia is due to also raise interest rate hike or release their new interest rate report. And this is happening on Tuesday. They are expected to raise interest rates by 25 basis points. And this is mainly due to the fact that their inflation surged to the highest level in 33 years in the last quarter. Okay, and if you followed the Australian Reserve Bank's interest rate hikes up until this point, you would see that they have been relatively aggressive with their tightening policy. So this is actually coming as quite a bit of a shock to all of them as well. Other reports that also created some disbelief on traders' faces, I believe, during last week was the retail sales report, as this dropped to the lowest or fell to its lowest level, which previously this level was only seen during the actual pandemic. And we also saw that house prices suffered their biggest drop since the late 1980s. Okay. However, the Reserve Bank of Australia has stated that their outlook for the Australian dollar has remained untarnished. So they believe that as long as China's reopening stays on track, that the currency should push higher. So that would definitely be something to look out for if you do trade Australian currency pairs such as Euro or GBP or USD or AUD USD, any one of those. So that will definitely be something to look out for if those are currency pairs that you do trade on a daily basis. That the Reserve Bank of Australia is still bullish on this matter, as well they do have a massive partnership with China. So as long as China's reopening, as I stated, stays on track, then everything looks good from that point of view. Moving over to the Eurozone, comments by the European Central Bank officials will also be closely watched after the ECB hiked interest rates by 50 basis points last week, Thursday. And this is where the big kicker actually came in last week, Thursday, as they said. And they promised that 50 basis point interest rate hike is going to continue in March. So the ECB President Christine Lagarde actually said that because of the high inflation currently still in the Eurozone, and this is currently what they are focusing on, she said, and I quote, "We have more ground to cover and we are not done." So additionally, during this week as well, Germany is set to release their inflation data, so also part of the Eurozone. This will affect the Euro as well, as Germany is one of the largest economies within Europe, and this is happening on Thursday. Also, ahead of that report, Germany is also set to release their factory orders data later today, so that's actually happening later today, as well as their industrial production report, which is coming out tomorrow. Looking at staying within that Eurozone, the UK also released their interest rate report last week. They also hiked interest rates by 50 basis points last week, Thursday. However, they said, and this was their comment, very different from what the ECB actually said. So the Bank of England actually said that they have seen a turn in the tides when it comes to inflation. So they actually believe that they can be less aggressive. So they can be more dovish in reports to come, or interest rate hikes to come, to actually not be as aggressive as their inflation is under, well, according to them, under control. They do believe that there is still a great possibility that their country would go into recession or might just narrowly avoid it. Okay, so no real set prediction on that. However, Britain's economy has been hit hard as well by the energy crisis after Russia invaded Ukraine, and we have seen them suffer because of this. Their workforce has downscaled. Business investments in the UK have downscaled, and after Brexit as well, I mean, we haven't even heard that word in a while. There's so much that also happened in the country there for them. So this has all led to their economy taking a bit of a knock, and this is why they also said that they are not going to be so hawkish going forward, as they also want to be they want to keep their people in their thoughts as well. So, not put too much pressure on their own economy, but still trying to keep inflation as low as possible. Okay, so I do see that I have one person who apologized and popped off. Okay, so we are going to. Okay, wait, before we actually move on, we do have about a minute or two additional still available. So I just want to ask, do I have any questions before I move over to the analysis that we're going to look at today? So do I have any questions from anyone here today based on anything that we have just spoken about regarding the US interest rate hikes, the Euro, the UK, or even the Australian interest rate hike coming up this week? Are there any questions from anyone before I move on? And if you don't have a question, let me know as well. I would love to hear from you. Additionally, if you haven't smashed that like button, please do that as well. If you haven't subscribed to our channel yet, please do that as well. Because we do our best to provide absolutely amazing content for you guys, and we would like to continue doing so. But in doing so, we'd also like to see our channel grow. Okay, I just want to see. Nope, all good. Okay, fantastic. Okay, so I am going to move over and share my screen now. So I just want to take this down and then take this down, and then you will see that there is currently a risk disclosure on your screen. Please read this thoroughly, as everything that we are going to share from here on forward is purely my opinion. Please do not take it as financial advice. This is trade setups that I'm going to be looking at. This is how I'm going to approach the market going forward this week. So yes, not financial advice, just my opinion, so please take it as such. So heading over, as if I remember correctly, all the comments that came through unanimously said GBP USD, so we are going to look at this. So on GBP USD, we are currently here on the 1 day time frame. So this is our daily time frame for GBP USD, and we can see that it is currently hovering in between that primary resistance level as well as that primary support level that we do have down here around 1.19 450. So what can we actually expect going into this week from this specific pair? So from a larger time frame perspective, if we do have a look at this, we can see here that we have this smaller support level that is right here where we are currently. Okay, now if we do stay above that, I do believe that there is a potential for us to actually push back up to that resistance, get a retest from there, and with everything that happened because of NFP, then we can see that there would be a potential strengthening in the market again. So just waiting for that small correction and then a sell-off back down to our support level. And once that support has then been broken, we can then look for further sells down to that lower level around that 1.16 level. Should we, however, break below this smaller support right here during today's trading session, then we are going to look for our selling positions right from here onwards and just continue riding the market until the market decides to change direction. So that would be the general consensus for me regarding this specific pair. Before I move on to the next one, do I have any questions? Do I have any comments? Do I have people disagreeing? Do I have people agreeing? Let me know. I would love to see some comments come through. So agree, disagree. Do you have any additional opinions? Are you seeing something different in the market, I would love to hear from you on that. Okay, so far nothing, so I'm going to move on as we are currently running out of time. So I'm going to just move over to NASDAQ real quick, and I'm going to make that the last one for this live stream today. So NASDAQ on a daily chart, super interesting level here. So as you can see, currently right on this primary resistance level, and we rejected that beautifully on both Thursday as well as again on Friday after that NFP report, and then today's downward momentum has just continued. So now personally for me, I'm aiming for this lower level here around this 12,250, 12,300 level. So that is where I'm heading towards with my specific trades. What am I waiting for an entry though, or what am I looking for an entry though? So on this, we can see on the lower time frame, so this is the 30-minute time frame that our EMAs have crossed. So additionally, we have also, broken down below this previous lower level. So on this, I'm relatively happy with looking at an entry already. If you do want to wait for a slightly safer entry, you can wait for a break below this lower support level as well. Okay, so we're not that far away from it, but it would absolutely solidify your trade. So if you want to wait for a drop below this 12,000, let's call it 12,450 level, once we actually break below that level over there, then you can basically just get your retest should you want to wait for it, or you can trade the breakout and then sell all the way down, as we can basically see that there is no real support and resistance levels, supply and demand levels in this area. That would be that final break to say, you know what, there is additional bearish momentum in the market and it is going to move all the way down. Okay. Any questions, any comments, anything whatsoever from anyone, let me know in the comment section real quickly. Otherwise, I am going to say goodbye to everyone here. I want to thank you for joining us for this live stream session. I also want to ask your opinion, to let me know in the chat section what you thought of this live stream session versus some of our other sessions, such as our weekly market review. Which one do you enjoy more? Did you enjoy the participation aspect more within our live stream, or do you enjoy the weekly market review more? Let me know. I would truly like to hear, as you know, the content is for you guys, so I'd like to get that feedback from you as well. Okay, thank you so much. So let's take this down from here onwards. Thank you. I really appreciate all the comments coming through. I'm going to give it about another minute, and then I'm going to say goodbye to everyone here today. And I just want to thank you all for actually joining. I just want to see if there's any additional comments. No comments. We're all good. So Brian says he likes both, so thanks a ton for that. Okay, well, that's fantastic. Altweer is reg. Great. Okay, cool. So I really enjoyed the live stream session a bit more. As I said, this is the first one, so I did expect some growing pains to take place. Hopefully the next one's going to be a bit smoother, the next one's going to be a bit smoother, and then we can just, build and go from there. So have a fantastic day further, and as always, may the peace be with you. Cheers.